right, guys, welcome back. Houston edition.
Oh man!
If you notice, the backdrop is different. That's because we're on the road right now.
yeah. We took the show on the road for this one.
For sure. So we in the great state of Texas, the beautiful city of Houston. So first and foremost, shout out to everybody in H-Town. We've only been here for like less than 24 hours, and we got shown so much love so far.
I mean, as soon as we got on the plane, right? They gave up their seats. Shout out to Crystal for giving up her seats so we could have some leg room. Shout out to
her. Shout out to her. Shout out to the radio station today.
Yeah, 97.9.
Our guy Matt Hatter. It was great. It was great. So we're enjoying ourselves, and we're gonna come back out here. We're gonna spend some more time in Houston.
The love out here is real.
Yeah. So we got a very special episode today. We have a special guest, Chris Senegal. Thank you for joining us.
Appreciate it, man. Welcome to Houston.
Senegal like the country.
Just like the country, man.
Shout out to Africa. We're gonna talk about a lot of different things. This episode, we're gonna talk about everything from gentrification, real estate investing, day trading, a lot of different stuff. Chris is a very interesting guy. He's a Renaissance man. He does a lot of different things.
Got a lot going on.
Yeah, he got a lot going on. And this is one of the things that we try to do when we travel. We try to tap in with the movers and shakers and business people that are making waves and making a name for themselves in the city. So we had to tap in with the good brother. So I want to get right into it. You're an interesting guy. You told me that you went to school to be an engineer. You're a trained engineer.
Yeah, civil engineer. Huh? That's my degrees in.
All right. And then, but you was actually day trading for a little bit, right? We haven't really covered day trading too much. We had an episode on stocks and we talked a little bit about Wall Street, but we didn't really go into day trading. What made you go into day trading?
Man, so eventually essentially that was my escape to try to get out of corporate America, because I was like the good kid, you know what I mean? Straight A's in school, full scholarship to college, engineering job. Got out there, I did it for like the first 6 months. And I was like, man, I've been sold a dream. I hate this. That's how I felt. And so first thing that came across my desk was stocks and trading. And I ran into a guy one day when I was at a conference for work, as a matter of fact, and he was by the pool all day, every day with his laptop. And I was like, what is this dude doing? And so he was a brother, and he was sitting out there, and I was like, what are you doing? He's like, oh, I'm trading. So he was watching the market, what they call scalping. So basically watching for a stock to go up, knowing that it's probably going to come back down really quickly. So he'll buy and make that little margin in the middle. And so basically I kind of talked him into becoming my mentor. And so for like a full year, I was like fully invested in learning how to trade outside of my work.
So prior to that moment, did you have any familiarity with stocks?
I had no familiarity with anything but going to school and getting a job.
Ooh.
You know what I mean? So I had no exposure to business, entrepreneurship, investing, nothing. This was my aha moment, you know what I mean? And that's how I got started.
So what did he teach you about day trading? Like, what does like day trading 101 look like? For anybody that's not familiar, day trading is when you can really day trade anything. It's when, so most of the time when you invest in something, you invest in whole, right? Day trading is when you're trading in the day. So you might buy a stock at 11 o'clock in the morning, and then you sell it at 11:30. You sell it at 1 p.m. You're trying to like just make quick, short-term profits, and you do that pretty much every day. And it's like a job where you're just like watching the computer, watching like different, swings in the market, and then you buy and then you sell, right? So what's the 101 that he taught you and you kind of learned as far as day trading?
Mainly just the cycles of the day. I think a lot of people that understand day trading, they're trained to look at the signals. So there's a lot of different technical indicators that people use. And there's certain dips that you'll watch for. There's a certain spike in a stock or a certain cycle where it goes up and down a couple times. And then when it breaks what they call like a resistance barrier where it goes up higher than something, then it's time for you to get in because it's probably about to make a run and go up. And so, like you said, day trading is basically just guessing what's about to happen based off of previous behaviors of generally stocks in general.
What's the stress level of somebody that's going to be day trading? Man, I could imagine, right? Like I remember we were talking about cryptocurrency and we weren't sleeping. So, I mean, we were doing that with money that we knew we could lose. But somebody who's doing that as a career, what's the stress level?
Pretty high, man. A lot of people don't survive. I got out of it after a year, honestly.
Okay.
I mean, it is. I would say it's about 30% better than gambling, sports betting. You know what I mean? Because at the end of the day, it's still a person on the other end of whatever you're watching that's making decisions. And it's big institutions that are buying stocks. It could be individuals. But if they own enough shares of that particular stock that you're watching, they make a decision, that's what makes it spike or go down. And so you're guessing and you're assuming that because people told you when you see this pattern in this stock that this is going to be the result, you're assuming that that's what's going to happen this time again. A lot of times that's not the case.
Yeah, because there's a thing called technical analysis. So when you're looking at stocks, there's fundamental analysis and then the technical analysis, right? So fundamental analysis is when you're looking at fundamentals. So that's like, you know, when people actually look at like earnings ratio and how the company is doing, stuff like that. But then the technical analysis is when you're just looking at all technical stuff, right? So these are things that really has nothing to do with how the company is doing. And there's like different indicators and charts, like the candlestick chart. And so there's, like you said, and then there's like barriers, and it's like, okay, if it breaks out over this, then that means it's gonna go up. If it goes down under that, then it's gonna, I tell people all the time, it's not something that you can just jump into. No, it's very complicated. It is. And you can get lucky, like all things in life. You can actually get lucky and make some money. But in the long haul, you can lose a lot of money because it moves very quickly. And like you said, a lot of things are just out of your control. Right. And even with the good technical analysis, you can still not really, because it's still kind of guessing in a sense. You're kind of just making a prediction based off of educated knowledge of what you are seeing. But even what you're seeing can be manipulated. Right.
So you said after you only did it for a year.
I did it for a year.
After a year, what happened next?
Man, I fell back for a minute. I started reading more and trying to figure out, you know, what other industry I could get into just to get out of that job. And so I started reading books, and real estate kept coming up. You know, at the same point in time, I actually decided I was going to leave that job I had, and I moved back to Houston. I was in Memphis at that point in time. Moved back to Houston, but it was during the recession, 2008, so I couldn't sell my house. So after like a year of paying the mortgage payment, I just decided to get a property manager up in Memphis to rent it out for me. They rented it out. They rented it up for like $400 more than what the mortgage payment was. So then that's when that light bulb kind of went off for me. It was like, wait a minute. So I'm out here trying to figure out what I'm gonna do. And meanwhile, I got this property that's out of state. I got somebody else working, managing it for me every month, and I'm making $400 a month doing nothing.
Blessing in disguise.
Blessing in disguise, right. So that opens up the passive income. So that's when everything shifted to real estate.
Dope. Can we talk about the franchise business that you had a little bit? Because you had, it's called Super Weave Express?
Yeah, Super Weave.
So what was all right, Super Weave Express, I'm assuming it was weaves?
Hair extensions, the full service salon.
Big business, man.
Yeah. So that's $1 billion business, right? We talked about the hair business, but not really in depth. But what made you want to go into, as a man, what made you want to go into a woman's industry?
Man, you know, I mean, it's a supply and demand thing, right? So as an entrepreneur, you know, you got to supply a product. And if there's a demand for it and there's a spread, then you can make a profit. And that's the only reason why I looked at it. The founders of that company are actually from my hometown, Port Arthur, Texas. Okay. And they had several locations. And I sat down with them and they showed me the revenue numbers, and their store was doing like $500,000 a year. And I was like, man, I had no idea.
The Weaves store? Yeah. It was a physical brick and mortar store?
Brick and mortar store. They had stylists there. And it was a commission-based salon, so they got a percentage of the commission, but they did all the marketing, they did all the advertising, and then they assigned clients to the customers as they came in, and they also supplied the hair. So they bought it at the wholesale price, sold it at retail.
So you bought a franchise, correct?
Yeah, I bought a franchise.
So what's that process like? Because I think we spoke about that in one of our early episodes about being a franchisee. What is that process like, and how did you get involved?
So the whole franchise model is basically, instead of you starting a business from scratch, you are identifying somebody that already has a business that appears to be successful, and you're paying them to use their branding, to use their business model, you know, their business plan, and in exchange, you're going to pay them up front, you know, as a fee to get in, and then monthly they're going to take a percentage of your revenue. You know what I mean? And so that's what your franchise fee is. And the thing that most people don't realize is that the average business is only profitable within the 15 to 20% margin range, right? So then when you're a franchisee, if that franchise says their royalty is what it's called, if it's 4 to 8%, that's 4 to 8% of your gross. So they are a top line expense. They don't wait to see if you're profitable or not on the back end. So franchises, they can be good because it takes a lot of the risk out of what you're doing, but your profitability goes down.
Yeah, you said
that's a trade-off.
Can you explain that? When you said the average business is profitable 15 to 20% in the profit margin, can you explain that? Like what that means to the average person that may not understand that?
So the biggest issue that I see with a lot of us, the biggest thing that we have a lack of exposure to is when we start businesses, we listen to what somebody quotes as their revenue, right? And that's the gross. So that's every dollar you've taken in, but that doesn't include what your rent cost is, what your labor cost is, what your product cost is. You know, even when you bring in money, if you're in a business that has a lot of merchandise and products. Even if you have profit, usually if your business is growing, you got to take all of that revenue and put it right back in the business to re-up on your inventory and probably buy more inventory to keep up with your demand. So there's a lot of money you can't really pull out that pot. Then you got like utilities, you got taxes, you got all these expenses that come along with running a business, and then what's left is profit. So, and most of the time that's 15 to 20%, especially if you're brick and mortar.
Yeah, you said that was one of your biggest mistakes, is getting into a business based on their revenue and not their net profit.
That's it.
How did that come about? How did you realize like this was a mistake that I made? Was
this business specifically. Okay. So when we opened, we hit a home run. You know, the first year we did $450,000 in revenue. It's like 60% from the retail side and 40% from the services side, which is a hair salon. But the expenses were so high and we had to keep so much money tied up in it that at the end of the year, what was left on the table was about $60,000.
Wow. And
then I had a partner. So now you're splitting that two ways. So now we for all that work, you make $30,000 a year.
Oh, that's crazy. Can you just go into that? You said that your net was $600,000?
$450,000. $450,000, yep.
And you netted 60?
30.
Well,
you have to split
60,
the,
yeah.
right.
Yeah, 30.
How did that happen?
Okay, so number one, we wanted to be in a prime area. So we went and got a retail space in a shopping center. We were like between a Sally Beauty Supply and a Sam's. And so that was like $5,000 a month right there off the top. Then since neither he nor I were stylists or we knew how to run a salon, we had to hire a manager. Okay. And we had to have an assistant. So that's $70,000 right there. And then, you know, the revenue for the hair extensions, you know, only about 35% of that is profit. So we spent $200,000 on that. So, you know, that revenue looks like it's really high, but when you look at all the expenses, it gets smaller. Then you got utilities, you got product you got to keep in the salon for the stylists to be able to use. You got marketing and advertising. We were spending like $5,000 a month to stay on the radio to keep people walking through the door. You got insurance. So it's a lot of expense that's tied to that business.
And this is 2017?
This was 2014, 2015.
Okay.
Yeah.
I'm glad you said that because a lot of times people don't fully understand. This is a reason why most businesses fail, right? Financial issues. They don't fully understand what goes into making a business. So even if you make almost, in your case, almost $500,000 a year, you still might be broke. You end up making $30,000. It's like you could have worked a part-time job.
Really?
And now, but that business is probably taking like 10 hours a day for you to actually run, maybe even more.
Exactly.
Right.
And we were open 7 days a week, so there was no days off, you know.
Oh, wow.
Yeah, so even though you have a manager still looks to the owner to make final decisions on things. So you're on call all the time. You know, I tell people a lot of times what you said is exactly right. You may leave the comfort of a job to start a business, not really realizing you just created another job for yourself with less benefits, with nothing to fall back on. You know, so it's got to be the right decision. You got to really understand the business you're getting into.
No, that's a fact. So what would your suggestion be as far as for an entrepreneur or an inspiring entrepreneur that is going out there? Would you say that, you know, looking at expenses is just as important as looking at what they could potentially make?
Much more important.
Much more important.
Much more important, yeah. And, you know, and I highly advocate getting a mentor, somebody that's doing it. And, you know, because there's hardly a business you're going to find where somebody else isn't already running a business like it. And I encourage people to try to find somebody in a different market that's doing the same thing so that they're more open and willing to talk to you about the ins and outs, the nasty part that people don't talk about. You know what I mean? Because they won't feel like they're creating their competition. But a lot of them just want to vent and they want to talk about, you know, the real issues, and they don't want to confide in their friends and their immediate circle because everybody looks up at them, puts them on a pedestal for having this business. But so it kind of gives you an opportunity to be a sounding board and really learn the business, you know.
No, that's dope. And then also experience is always the best teacher as well. I mean, no matter how much, you're still gonna have to make mistakes and learn on your own.
Yeah.
But like you said, you kind of curve the learning curve a lot if you actually have a mentor or you're working under somebody for a certain
100%.
It's not about what you make; it's about what you keep, man. For sure.
Yeah, and your school kind of conditions us to try to learn how to get it right on our own first. Like, don't cheat, don't copy off of somebody. But when you get in the world of business, your best bet is to copy the right cat.
Let's not try to read.
That's a good. That's a good point.
That was an excellent analogy.
That's actually a really good point. Never really thought about it like that.
Well, I mean, and that's something I teach too, like, because I meet so many people in corporate America that are trying to get out, and I just tell them, number one, you got to retrain the way you think about everything, because not only school teach you not to cheat, school teaches you that if you're wrong more than 10% of the time, you are not the best. All A students got to be right 90% of the time or more consistently to stay up on that pedestal. Whereas you got a lot of people that were C and D students they comfortable failing 20, 30% of the time, all the time, and at the end, they got the same diploma you got.
You know, Jack Ma said something interesting. For anybody that doesn't know who that is, that's the head of Alibaba. He's one of the richest people in the world. And he said he tells his son that you don't have to be an A student. It's okay to be a C student because those are the only people that have enough time to be well-rounded and to experience a lot of different things. Because the theory is that a lot of times it's like doctors, right? A lot of times they don't know anything about a lot of stuff because they focus so much on medicine and passing all their tests. They don't know how to write a check, right? So what you're saying actually makes a lot of sense, and it is an issue with the school system, because even if you look at a sport like baseball, you bat 300, you bat 400, you're like one of the best ever. Like
that's
so
a rarity.
And that's less than 50%. You expect somebody to do 80, 90%. It's not realistic, in the real world. You make mistakes, especially if you're going to be broad range and have knowledge on a lot of different things. It's hard to just truly master 5 different subjects.
That's one of those questions we used to ask ourselves, right? It was like, should we know a lot about a few things or know a little about a lot of things, right? Because that makes you more well-rounded when you're versed in a lot of things, right? Like, I don't have a background in business, but I'm willing to learn in these areas, right? I might not know medicine, but I'll research on it. You know what I'm saying? So we got to keep ourselves well-rounded. That's why I always stress, like, education doesn't stop in school. Right? It goes beyond the 4 walls of the building of school. It goes in the living environment. It goes in the home. It goes in the community. It's all over. It surrounds us. All
right. So that was actually really good information as far as for anybody that's looking to get into business and business owner. But now we're gonna go into some more stuff. We're gonna go into real estate. And we're also gonna go into your career as an engineer. I think that's interesting and something.
I think we've touched on that. We haven't
really spoke about that. But all right, so we're going to that in the next segment. All right, so now we want to talk about. So you're an engineer by training, and you worked for the railroad company, right?
Right.
Can you explain that, like what you actually did? Because you did that for 12 years, right?
Yeah. So I started while I was in college, like working for them part time. But what I did was design rail terminals. It was pretty simple as far as engineering, because you're not building buildings or anything, but it was just a lot of work that was needed to, like, after a derailment, realigning the track and making sure that the trains can run, because they run at a high velocity on these 2 little bitty rails, and you got hundreds of thousands of tons moving at 60, 70 miles an hour. So you had to make sure that everything was designed, the curvature was right, and all that kind of stuff.
And where were you doing this at?
So I started off working for CN Railroad. So I was covering between Chicago and Baton Rouge, Louisiana.
Wow. Because we've seen in the past few months, these railroad systems, the subway systems, especially in New York, where we're from, that are completely outdated. They're running on systems that are from like 1910.
Right.
And we're like, how is this even possible?
Yeah, technology has not changed, and they do the minimum maintenance to keep it up. So I was on like the freight side, so it wasn't any passenger rail. Okay. So a lot of it's behind the scenes, they didn't get a lot of exposure unless there's a big derailment somewhere.
Yeah. So merchandise and product is moving through your lines.
Right. Exactly. Okay. And like 80% of anything that moves somewhere in the United States, if it comes in on a cargo ship from China or somewhere, it moves by rail at some point in time. It only moves by truck when it gets closer to its destination.
Yeah, I don't think people realize how big of a business trains are, because the vast majority of the country probably don't ride trains. Like, we're kind of jaded because we're from New York, so we're used to riding trains, subways and trains. It's pretty normal. Yeah. But most of America, they don't really ride trains like that anymore. So people might not fully understand that trains is a big business. And even if you don't ride it, like you said, a lot of cargo rides on trains.
Yeah, and what people don't realize is that the railroad is basically what helped build the West. Like when everybody went from the East Coast to the West Coast, everything was moving by rail. It was small trains back then.
It's a great expansion, right?
Yeah, the great expansion. Yeah, everything was done by rail. And people always wonder why the railroad's in the hood. That wasn't always the hood. That's what the first area that was settled in every small town, because you had to bring everything in by rail to set up, the infrastructure to build a city hall, to build small buildings. Everything came in by rail.
So one of your job titles, no, not titles, but responsibilities is design. Mm-hmm. Are you designing the actual tracks? Like, what does that mean?
Yeah, designing the actual tracks.
You are?
Yeah.
Oh, wow.
Well, that's what I did. Now, I did that for the first 4 years I worked for the railroad. But like I said, I wanted to get out of engineering. So, and once I started getting into reading the real estate and entrepreneurship stuff, I realized I needed to learn more about business. So I kind of took that opportunity while I had the corporate blanket over me to try to get into other departments. So I went into operations. So I ran freight terminals for like 4 years. And that was crazy experience because I'm like 24, 25, managing guys that's 40, 50, making twice as much money as me. Them union guys make over $100,000 a year. I was making like 50, 60. So I learned a lot about managing people in that role. And then I got out of that and I got into the marketing and sales side. And I was lucky enough to get into industrial products, which is chemicals and oil and gas stuff. So I'm sitting in rooms with all these decision makers at Exxon, Chevron, Phillips 66, these type companies. And it just opened my eyes to a whole different world. They speak a different language. You learn a lot more about the economy and infrastructure, everything.
Like what's one of the things you learned when you was working on that side of the fence?
Man, I just learned how money really works and how people really make decisions, because energy runs the country. You know what I mean? Like without coal, without oil, without gasoline, everything shuts down. And so they know that they basically have a monopoly on everything. And the profit margins are crazy in that world.
What's the profit margins?
300% on a lot of stuff.
Wow.
On like gas and oil and stuff.
Yeah.
So let me ask you this then. A lot of people are saying that we should move away from that, going to solar energy, wind energy, electric energy. You're an engineer and you worked in the space. Is that realistic? And what's your thoughts on that? Like as a long term, can we continue the way we're going now, or do we have to make a change?
I mean, eventually there will have to be a change because there's a limited amount of fossil fuels out there. So we're going to have to find other energy sources that we can use that are renewable. So it's definitely feasible. It's definitely plausible. And like wind, sunlight, water, that stuff's not going to go away. So we're always going to have that. But you just have these big institutions that are making so much money off of the fossil fuel based energy sector that they're not going to just give up their position.
Yeah, and they do a lot of lobbying in Washington.
That's what I was about to say. That's something that we don't really understand, but that lobbying is powerful. That's why all the legislation really happens. And I don't care who you vote for. It's somebody with money in the behind the scenes in Washington taking them out to dinner, wining and dining them, and that's when the real decisions are made.
You got to make sure they keep their money going.
Yeah.
I remember when Hillary Clinton was running for president versus Trump, I think. Yeah. So they were saying, I think Chase put like $10 million into Hillary's campaign, but they put $9 million into Trump's campaign. So no matter who won, they won.
Right.
It doesn't matter. Like,
Right.
I mean, that's what people don't fully understand either. It's like you playing a political game based off of emotion, but these people are playing a political game based off of strategy. It's two different things.
Yeah, they're playing chess.
Yeah. They're going to give money to Republicans, Democrats,
Yeah.
and Independents because at the end of the day, they need what they need done, and money talks.
And whoever's the decision maker, either red or blue, is going to help them.
Right. Yeah.
So you started a business, the e-rail commerce. Can you talk about that?
So basically, something else I like to teach entrepreneurs, especially the ones that's coming out of the corporate world. Everybody feels like I got to create something new. Like I got to get into an industry that I see everybody else doing, right? But what I realized is like, man, if this company is paying me $100,000 a year to do this job, there has to be a smaller business out there somewhere that needs these same services, need the same skill set, and I can just go out and provide the service for them. And instead of being their employee, I become their consultant. So that's what e-rail commerce is. I took all that experience I had, all those connections I had with the railroad, all these oil and gas companies, and I found all these smaller companies that need or want to get a contract with an Exxon, because Exxon has over 10,000 rail cars. Every one of those cars has to be maintained, has to be repainted, has to be cleaned, there has to be maintenance done to them. They have to store them when they're not using them. They got to park them somewhere. So what I do is I help all those companies that provide those services get in the door with Exxon, get the contract, and then they perform all the work, and I just get commissions off of the deals.
Wow.
So you're like the relationship man.
I am. I'm basically brokering. And I have everything set up with with my clients to where whatever contract I help them get, I get paid.
But so E-Rail is not the only form of consultation that you're providing, right? Don't you have a few other consultation things that you do?
Well, I mean, in general, I just try to help entrepreneurs get started, you know what I mean? Because, I mean, I was so lost when I was trying to get out of the work world, and I was like, man, nobody was really here to guide me and teach me. So I use my social media platform, and, you know, I use that network and that audience as my way to give back, you know. So anybody that has wants help with it, getting started in entrepreneurship, I try to teach them the basics, the kind of stuff we're talking about now.
Yeah.
You know what I mean? I get them as far as I can, and then I try to network with someone that's actually in their field and try to get them to get under that person. You know,
so you're providing the mentorship by consulting.
Right.
Okay, gotcha.
Yeah. Mm-hmm.
Consulting is something that we also haven't spoke about yet in this podcast, but it's extremely important, and it's a very profitable business as well.
It is.
Yeah.
Consultants, you have consultants in school industry, you have consultants in political industry, you have consultants in all kinds of stuff, right? Can you explain the importance, a lot of times, especially for small business owners, this is the problem with small business owners as compared to big business. They have small way of thinking. They don't understand the power of consulting. They don't understand the power of marketing. They don't understand. They just want to just do the work. It's like running on a treadmill. You can only get so far, right? When you get enough wind behind you, now you can start to fly. So you talk about the power of consulting. Like what can somebody get value out of as hiring the right consultant?
So there's only two ways you're gonna learn. You're either gonna bump your head and you're gonna lose time and money, or you're going to pay for the knowledge, period. There's no other way you're going to learn, right? So you hire a consultant. The consultant is someone that's an expert in that field, that's already got experience doing what you're trying to do, or they can help you with a particular area of the business that you can't fulfill. Like if you have a great product, but you don't know how to get it in front of enough people, you need a marketing consultant to come in and help you get it in front of the right people. And so it's basically a way for you can add a whole department to your business without actually having to hire an employee. It's a consultant. You know, that consultant can either be somebody that's paid by the hour, or it could be somebody that I always recommend you get performance-based consultants, which means they work off a commission. So if they don't produce for you, they're not gonna make any money. Right. So that gives them a vested reason to get in there and work hard and get something done. And on the flip side of that, like you said, that's a very lucrative business too, because it's a business where it doesn't require you have to invest a lot. You can work from home and be a consultant, and people are actually paying you just for the knowledge that you already have. You know, so you can take that corporate experience. You could have been flipping burgers at McDonald's for 5 years, but guess what skill set you got? You know what it takes to onboard a new employee, so you can go to other small restaurants and say, here's the McDonald's model. I'm gonna teach you how to run the McDonald's model for your restaurant. And
that's something that anybody can do. Like as you're saying it, I'm thinking like, especially in the education field and especially in the restaurant field as well. It's like people always try to figure out how can they make passive income, right? And they don't realize that they have a skill set already. They're just overlooking it, right? They're not maximizing their potential.
Well, this is one of the things when you talk about multiple streams of income. Guys say the average millionaire has 7 streams of income. That doesn't mean he has 7 jobs or even 7 businesses. It's that they're maximizing their skills for maybe 1 or 2 businesses. So as you said, you can be a teacher, right? But you're an expert in that field. If you're a really good teacher, now you can be a consultant to school districts, right? Curriculum, things of that nature, right? And that's something that anybody can do, as Troy said. Even if you're still an employee, you can be an entrepreneur and create your own consulting business.
And the amount of time, it doesn't require as much, right? You can say, these are my hours. You dictate the hours and you dictate the fees.
Yeah, and a lot of times you're helping different customers and clients with the same problem.
Exactly.
So you already know it like in and out, you know.
For your consulting business, how did you market yourself to your customers or clients? How do you?
Man, the most powerful tool I use is LinkedIn.
Okay. And
what I liked about LinkedIn is because when you put yourself on there as a business owner, you give yourself whatever title you want, you know. So I gave it's me and one partner, but my title is executive VP. So that puts you in a whole different arena when you get on
they
there.
Look at you like, oh,
it's all perception.
Yeah,
it's all perception.
That's a fact.
So then when I see a company that I'm trying to get a connection with, and I go to the CEO and request to connect with them, they be like, oh, it's another executive that wants to connect with me.
Yeah, we got an exec that wants to meet you.
Yeah, and that's all it is. It's positioning, and it's all about, you know, what you post. I repost a lot of Wall Street Journal type articles that are related to the industry. Any type of insight that I get from anybody else that's in the industry, I'll make a post about that. So then you kind of position yourself as a subject matter expert. So then what happens is eventually enough people are watching your posts to where when they have a problem, they come to you instead of you having to go out and ask for business. And another great thing I like about LinkedIn is because you can type in any job title you want. So I'm in supply chain, right? I type in director of supply chain. LinkedIn is going to give me a list of people with that title. So then all I do is go connect, you know, and then that builds your audience because people go to check you out to see who is this that's asking to link with me. And then my network on LinkedIn is like 17,000. It's all industrial product supply chain people from all these big companies.
Yeah, you got
that's a lot.
That's a lot, man.
For LinkedIn, you got to accept every single person, right?
Yeah, but the person has to approve the connection. But if your page is set up to where it looks like, oh, this is somebody that I might want in my network, then you're good. And that's the whole purpose of making sure that you set yourself up right on there with the right titles, right?
You send was it in mail, right? They send you in mail, so you
both. I guess I'm both. Yeah. I met with a guy. Matter of fact, he flew in from Arkansas last week because he's working with a private development group that does industrial development, and they're looking for new locations to build new rail terminals. And that was part of my job when I worked in the railroad, so that's part of my consulting too. So he literally reached out to me because he had been seeing me make these posts on LinkedIn about railroad development and railroad terminals. So this guy literally flew in for the day just for that meeting.
Wow. So you are using your resources efficiently. And a lot of times people don't realize that. Like they're just on LinkedIn or they're just on Facebook just to put pictures up and not networking and not realizing how powerful a tool they have at their fingertips.
Well, LinkedIn is only for networking, but I actually got to do a better job on LinkedIn because I don't know. I just don't feel too comfortable with it. I feel like it's kind of boring.
I think I have a page too.
It is boring, but it's like Facebook, but it's for business only. You know what I mean?
It's powerful.
Yeah, it is. It is. I mean, you would be surprised the people that don't have a lot of LinkedIn followers that are like powerful people. Like, I mean, like producers, executive producers at these big stations, they may have 500, 1,000 connections, and you go request it and it's approved the next day. But it's like a back door to get the connection that usually you have to call a corporate headquarters and talk to an administrative person and ask to schedule time to meet this person. You just go to LinkedIn and find them.
So when you it's like getting you past all those steps,
exactly.
Right? Like
all the gatekeepers.
Yeah,
you bypass all the gatekeepers.
If the person's on LinkedIn.
If they're on there.
But everybody's on LinkedIn. And LinkedIn is the most powerful search thing too, because so when you search somebody's name on Google, the first thing that comes up is LinkedIn.
Yeah.
That's like the first thing. It's like it's like your online resume pretty much.
It is.
And so I don't know how they work that with the algorithm, but they always are on the top of your thing. So you kind of have to have a LinkedIn page if you're doing anything in business. It's like almost mandatory.
Yeah, I agree.
I got to update mine.
So.
Yeah, man. Definitely.
All right, so that was good info. So now, in the last time we want to go into real estate, we're going to talk all things real estate.
You got some big things going on.
That's what you're focused on now. Yeah. So yeah, for sure. All right. So in the last segment, we're going to talk about real estate, right? So, okay, what made you go into real estate first and foremost?
Like I said, I kind of fell into it with the corporate job and leaving, and I had bought a house at the first gig, and when I moved back to Houston, I couldn't sell it, so I had to get a property manager. Property manager rented it out. I was making like $400 a month, and I wasn't working at all for it. I was like, this seems like something lucrative, and the more you research real estate, it's like 80% of first-time millionaires are made in real estate. But
this is at a relatively young age, right? Like your first property was at 22?
Yeah, 22.
That's pretty young, man.
Yeah, 22. Man, so that was kind of a blessing through having worked with the railroad while I was in school.
Okay.
I had enough tenure with them to actually qualify for a moving package.
Ooh.
So when you work with a corporate company, when they move you, they either give you a stipend or they give you like a down payment towards a house.
Oh.
Yeah, and so they gave me the down payment, and instead of me getting an apartment and pocketing the money, I decided to get a house.
So, but you could have took the stipend.
I could have took the stipend.
You took the long-term play.
Yeah.
I mean, you're not an engineer by mistake.
Nah, man, I know. Yeah.
So all right, but so then how did that transition to you doing what you're now as far as you're developing?
So so when I moved to Houston, I decided I wanted to go really hard in the real estate game, and so one of my line brothers, my frat brother, worked for Homevestors, the We Buy Ugly Houses people, and he was their property manager in the hood, and so I kind of told him what I wanted to do, and so he ended up plugging me with one of the contractors that Homevestors use, and this guy was flipping 20-30 houses a month for them, doing actual rehab work. And so he kind of became my mentor, and we would pick houses. I would flip them. Of course, he would make money off of the rehabs. And so that's how I kind of got into the real estate game in 2009. I would sell some of them. I kept some of them for rentals. And I was doing that for about 5 years. But then I got tired of having rental property. I mean, I know everybody says that that's what you're supposed to do. You're supposed to buy a home to live in and have rental property. But man, owning rentals sucks.
Yeah. What are some of the downfalls?
Okay, so a lot of people, so a good profit margin on a rental property is $300 or $400 a month.
Okay.
Right? But you have 1 month, say like a tenant moves out, and then it takes you a month to find another tenant. And if your mortgage payment is $1,200, that's literally 3 months of your profit gone. If you got to make a repair, that repair is $1,000. That's another 2.5 months of profit gone.
Mm-hmm.
You know what I mean? And so for me, it was like, and then you have this debt. I was owing like 100, 120 on each house. And so now you got debt and you got these small profit margins. And it's like, okay, I can see how long-term I can continue to do this and make money slowly. But dealing with tenants tearing stuff up, it just wasn't something that I enjoyed doing.
What type of properties were you looking for? Was it single family homes or multifamily or mixed property?
At that point in time, I didn't qualify for anything like extravagant, so I was just buying little single family homes. And I'm saying there's nothing wrong with it. Everybody can make money in any industry, but for me, it's just like I want to do something bigger. And so as I continued to flip, I started realizing, this narrative about gentrification happens over and over and over.
Mm-hmm.
And I was like, man, I know a few of us that are flipping. I don't know anybody that's really trying to get into the development game and kind of change the narrative so we have some control over that. So 2013, that's when I decided to kind of get off into that.
So were you buying land in 2013? Was that the next step?
I didn't know what I was going to buy. I just knew what I was going to do is stop flipping and try to figure it out.
Okay.
So I just started talking about it, and man, it came full circle. My same line brother that helped me get into the game, he had an old tenant reach out to him that used to be in one of the properties and say, hey, I'm over here in 5th Ward, and the landlord over here isn't taking care of the property. I think he's on drugs.
Mm-hmm.
And so, what he heard was opportunity. So he reached out to me, and he's like, man, I think we got an opportunity to go pick up a few houses over here. So I went to go meet with the guy, ended up being a whole block. He had a grocery store on it.
How much was that?
Okay. True story, at the time, this was in the hood. It wasn't worth nothing. It was probably worth $300,000 the whole block.
The entire block.
Everything was kind of run down. But it's in the area where you tell somebody I'm about to go spend $300,000, they're like, man, are you crazy?
Right.
It's the hood.
It's the hood.
Yeah,
nothing but drugs and prostitution over there. You're gonna waste your money. So what I ended up doing to talk him into doing the deal, I offered him $400,000 for it. So, but of course I didn't have the cash to pay $400,000. So he actually had inherited the property from his dad. His dad was like a real estate tycoon. Had like 26 blocks over there.
26 blocks.
26 blocks.
Whoa.
26 blocks. And this block happened to be the one that they gave this kid, and he was like the horrible kid. You know what I mean?
He botched it.
Yeah. So this was the one he had, and he still wasn't taking care of it. So I offered him an owner finance scenario where I was like, I'll give you 10% now.
What's owner finance?
So that's when instead of going to the bank, the owner that actually doesn't have any debt on the property will let you make payments over time to buy the property from him. So I gave him 10% of what we agreed to, the $400,000, so $40,000, which came from me selling one of my rental properties, and then that allowed me now to control that whole block of property. And it had the grocery store on it, and it had the houses, but everything was really run down. So instead of fixing it up, what I decided to do was do parolee housing for felons, because it's really hard for them to find anywhere to live.
Mm-hmm.
So I would rent them out a single room in each one of the houses, charge them $350 a month. It was something that they could afford because of the type of jobs they could get. They didn't have much income. Or
was that like a halfway house?
Pretty much like a halfway house.
Okay.
Yeah, they call them SRO houses.
And then so the state pays you that, right?
Sometimes if it depends on what program they're in, they get some type of housing assistance, but most of the time, no, they have to go get a job.
Okay.
So that's what made it really good, because you talk about a low risk tenant. You got somebody that's happy to be out of prison. They was in prison for a non-violent offense. I didn't do violent people. They had to keep a job, and they had to keep somewhere to stay, and 99% of the places wouldn't even allow them to live there. So they were like built in good, high revenue for me. You know what I mean? As collectively in each house, whereas I could have rented that whole house for $500 to a regular family. Now I'm making $1,100-$1,200 off that same house. with this program. And
because you were renting the rooms,
renting them individual rooms, and most of them had trades, so they were like carpenters, electricians, plumbers. They all learned their trades in prison. Yeah. So anything went wrong, I just drop off materials. They would fix it.
Oh, wow.
You know what I mean?
The wind is built in.
and they were just happy to have somewhere to live. Yeah. So that worked out. That was a win-win, man. And then that was 2013, 14, 15. I did that. In 2016. Redevelopment kind of started in the area that I was in. Something else that I always watched too, even when I was flipping, is what the city's plans were. And you can go to the planning department's website, and it'll tell you what they're planning to do 5 years, 10 years down the road. And that's a lot of the game that we don't pay attention to. But the other groups pay attention to that.
Where can you find that information at?
Usually you can just Google it, like planning and development department or urban planning for whatever city you're in, and it'll pull up on their website. It's usually a .gov type website, and it'll have all their information. A lot of it's talked about at city council meetings, so you can look up city council meeting minutes, and it'll tell you about anything big, any developer that's proposing to do something in a certain area. All that has to be publicly announced. So, but what I noticed about Houston was that everything was going counterclockwise around downtown. And the Fifth Ward neighborhood that I was buying in was the last quadrant. So I knew eventually it was going to come. I just didn't know when, And so that's how I got into it. And 2016, another guy started building. So then I figured it was time for me to try to figure out how to get it done.
So what's your philosophy on gentrification? How do you feel about that?
So gentrification has a very negative connotation in our community because we are never the ones revitalizing that neighborhood. And what happens is the people that are revitalizing are looking out for themselves or their own groups. It's not that they don't care about us, it's that they have their own personal agendas that they're moving forward. And so we can either continue to watch it happen or we can participate, right? And we can participate in a way that we kind of control the narrative of what's being built, who it's being built for, and what happens to the surrounding community that we're building in. Right. So my goal with my project was, most of the time when you hear about black builders in black neighborhoods, it's low income stuff. And I feel like that's great. Like we do need to look out for the low income people, but we got to attract the people that were successful, the people that made it out those neighborhoods and back to those neighborhoods, because we need that income. We need that demographic if we ever want a grocery store to come back. We can't sit and depend on the government to do that. And right now what happens is the people that are successful, they go and buy houses in the suburbs. Right, it's not because they don't want to move back; it's because they have no options. So my focus was, let me start building some market rate stuff, not low income housing stuff, but try to attract these working professionals back to the neighborhoods with a high quality product that they're going to pay the same price they're paying in the suburbs, and in the city, your value is going to appreciate a whole lot more, especially when that neighborhood starts to revitalize.
And that's kind of what you've done with the land that you bought in 2013,
right?
Which is the most recent development that you worked on. It's a 14. Is it 14?
Yeah, 14 units.
14 unit
14 individual
townhouses.
Yeah.
Yeah, you want to talk about that? How that came about?
Yeah, so this is the same property that I bought with the grocery store and everything. Okay. So 2016, I decided to just tear everything down. When I saw there was another developer that was building houses deep in the neighborhood, and he was selling them for $250 before they were complete. He wasn't even listing them on MLS. So I'm like, so that tells me that there's a mindset. There's enough people out there that are willing to save $100,000 because everything else inside the city loop was like inside 610 loop was $350 or more. So, but people would rather save that money and live in a neighborhood that was still pretty rough. So I was like, well, if he can do this deep in the neighborhood, I'm right on the feeder to the highway. I got a view of downtown. I should be able to do something with my property too. And so that's when I decided I'm gonna move forward with this initiative to try to build these townhouses. And it took a lot of work. It took me building the right team because I had no idea what I was doing. Goes back to what you were talking about earlier with the consultant. I had to find the right team, I had to find a builder that had enough experience that was willing to kind of lend his knowledge and time to me, of course, for a fee. Had to pay him to be my consultant, basically teach me how to do the first project. But that's what I did.
So what's your plans now as far as how many projects are you working on? Like what's your vision look like for the next 5 years?
Next 5 years, I want to finish this project, which will probably be finished next year, and I want to continue to build the same model in the same neighborhood. I kind of want to make this like a real world example that can be duplicated in other cities. Like we can go in, we can buy the land, and I didn't mention my entire team is from the community too. Mm-hmm. So like my builders, my real estate brokers, my insurance brokers, everybody.
Contractors as well?
Contractors as well, yeah. I'm working with a black builder. So, and it's not just anybody. It's people that got good reputations, but we kind of always silo ourselves and we never really collectively work together on stuff. Yeah. So, and the goal, and the most important part of all of this, whether you flipping, another industry a lot of people in is wholesaling or building new construction, is ensuring that you put the product in front of the right end buyer. Because if you flipping, you call yourself buying a block, but if you're not watching who you're selling to on the back end, right, you're still gentrifying the neighborhood.
Yeah.
So my goal is really to educate us on, like I said, the working professional on why it's better for you to buy over here. Yeah. So I'm building the first 3 now. Got contracts on 2 of them. Both of them are young black professionals, basically oil and gas professionals.
That's townhouses, right?
The townhouses, yeah. I got a dentist, a black dentist from Dallas that's looking at buying one. So it's all about making sure that we create that model, because right now that gentrification narrative is the only thing that's real. Mm-hmm. And for our people, we do better when we see examples of something that's actually working. And so when this is complete, I want to make sure that this model gets as much exposure as possible. It's not about me making all the money. I want people in other cities to do the same thing. To say it's possible. We really can't do this, and this is the example.
How do you evaluate like what area you want to? I know you say you look at the city plans, mm-hmm, but do you have like a set formula, or it's just kind of like you just know the area and you just kind of have a good feeling? Because you can buy in some bad neighborhoods and they don't get better, right? So it's like, how do you know like this is probably going to get better?
It's all about your network, because you got to be talking to people in the industry. So a lot of the realtors that I work with, they work with builders, and you got to have a network of commercial realtors around you too, because they know where the commercial developers are looking at, what areas they're looking at. So a lot of it's word of mouth in addition to what you see on the city plans. But yeah, you got to have your foot in the door. You got to be on the inside, understanding where they're moving. And you just kind of ride that wave along with them. Yeah,
a few years ago, y'all had one of the most horrific hurricanes in United States history. Mm-hmm. What impact have you seen since then on the real estate in Houston?
Man, for it was a period of time where the houses in the areas that did not get flooded, mm-hmm, the values went up tremendously, or they were getting bought up really, really quickly. Mm-hmm. I didn't see too much of a negative impact. The only thing that I did see is a shift in ownership, where the people that didn't have the proper flood insurance, who lost their homes, had to become renters for a while, right? But at the same time, the investors who had the cash on the table were able to pick up a whole bunch of properties for a lot less than what the values were. Anything under like $200,000 was still selling as it was rehabbed, but anything above that $200,000 mark, a lot of it sat on the market. A lot of it's still here now. We had a lot of out-of-town investors that thought that they could buy these flood houses and flip them and sell them really quickly. But the people in those price points were not comfortable, setting up their homestead again in an area that just flooded like that. Mm. So what's your outlook for Houston? For anybody that's interested in maybe coming in and investing, optimistic for the city? Very optimistic, man. Houston, on the next census, they're going to announce that Houston is now larger than Chicago. So it's going to be
number 3.
It's going to be the 3rd largest city. Yeah. And Houston was least hit by the recession because we didn't have the big inflation in home prices that other markets had. When you look at like international investment as far as real estate in the United States, Houston is number 1. Mm-hmm. Whether it's coming from China, Australia, Nigeria, anywhere basically, they invest here, because if you're looking at the 3 or 4 biggest cities, the real estate is still cheaper here. Yeah. And like I said, and the economy was not hurt as much as the other big markets by the recession, so it's the safest bet. Not only that, but you got more people moving to Texas every year, and like I said, Houston is rapidly growing, so the real estate outlook is strong for this market. I mean, there's 2 things that I believe are kind of the wave of the future for investing. Is either tech or is real estate, because no matter as technology will advance and replace people and jobs, but people always have to have a place to live. I mean, that's never going to change. Yeah. And I think it's the biggest city land-wise. Yeah, right? It is. Yeah. It is. Square footage, yeah. So there's a lot more room for it to be developed. It is. And what it is like it's spreading out and it's consuming all the smaller towns around it. Yeah. And they're all merging into one big municipality.
You think a part of that population increase is due to the influx of people who were misplaced after Hurricane Katrina, or?
I mean, we saw a wave of that. Okay. But a lot of it, no, it's just business. It's attractive, Mm-hmm. You got a lot of people that move from high real estate markets like California. They'll sell their house out here, and you know, it could be a regular 1,800 square foot house in California. They sell it for 1.2 million. Come out here and buy a mansion.
Yeah.
You know, so a lot of people transition down here because just the cost of living is cheaper.
Yeah, sure. So, thank you, man. Thank you for rocking with us. So, how can people contact you? Any initiatives you got going on, social media handles, all that stuff?
Yeah, so social media, my Instagram is _INVSTR, which is investor with a lot of the vowels missing. And then my website is my name, chrissenegal.com, CHRISSENEGAL.com. It has a link to everything, LinkedIn, my email, my websites, everything. So, yeah, man, I use my platform to kind of do everything we're talking about now, just educate people on entrepreneurship, real estate investing, and you know how to change understanding money and how money works. You know,
no, that's important. That's important. Troy.
Yeah, so just want to give a quick call to patreon.com. That is our Proud to Pay program. It's patreon.com/Earn Your Leisure. There are 5 different tiers you can join at. Each tier has a different feature. You know, we have bonus content, bonus video. We have video calls. Shout out to our new members, Jason, Candace, Michael, and Elliot. Elliot, we reached out and we kind of got disconnected on our call, but we're definitely going to be in contact with him. And shout out to Danita again, who's from the H-Town and has been showing us so much hospitality. We landed and she came up with a full itinerary as soon as we got off the plane. So shout out to her. And yeah, man, feel free to subscribe at any time. Also go to earnyourleisure.com. We have our merch up there. And we got a few other things that will be coming in September. September's going to be a big month, so be on the lookout for some new things from Earn Your Leisure.
Yeah, for sure. And once again, thank you to the city of Houston. By the time you guys hear this, we'll be back in New York. But the networking event, we actually got our networking event tonight. And I know it's going to be crazy. I know it's going to be amazing. So I'm looking forward to it. But, you know, this is what we like to do. And Patreon is a way to financially support the podcast. And this is ways that we travel. We highlight local entrepreneurs and business owners. And we educate people on what's going on in different areas. Right? We want to go to like these different areas and say, okay, we're in Detroit. What's the opportunities here? What's the opportunities in Chicago? What's the opportunities in Cleveland? What's the opportunities in Houston, Texas? So it's important. We can't just think locally. We got to think, you know, we got to broaden our horizon and think on a national level and on a global level as well. I'm very big on that globally. So my book tip of the week is Entrepreneur Roller Coaster by Darren Hardy. And every entrepreneur understands what that means because it's a roller coaster. It's never all good. It's never all good. So yes, and also don't forget to subscribe to our YouTube channel, Earn Your Leisure YouTube. We will be putting bonus content up, and we got different segments, and you just want to see things visually. YouTube is the place to see it. iTunes as well. Subscribe to our iTunes. Those are our 2 main outlets, but we're also on Spotify, Google. We're all over the place. And then, as I always say, if people want to get in contact with me as far as to ask me questions in regards to my business as a financial advisor. You want to roll over 401k, you have an inheritance, you want to invest some money, you can go to earnyourleisure.com and my calendar is on there. You can book a 30-minute free consultation with me and I can give you some advice, see if I could be of any help. And yes, we will see you guys next week.
Yeah, we got to welcome Chris to the Alumni Club.
Yeah, for sure.
Yeah.
Appreciate it. For
sure. Everybody that comes on the show, after they finish the episode, they become alumni. Because the next time we come to Houston or we go to a city, you may say, yo, I want to come to the event too. Okay. So we just bring alumni to the event.
Oh, I love it.
So welcome to the Alumni Club.
Appreciate it.
Yeah, well, he's gonna be at the event tonight. So he's gonna be the youngest alumni. For sure. So yes, thank you for rocking with us. We'll see you next week.
Peace.